Okay, let's get started. Thanks for joining us, everyone. And I guess it's good morning to most of you. This is 9 a.m. in Singapore and in a lot of parts of Asia. For me, it's good evening, and it's now quite June 28th. As you may know, for those of you who spent time with us, Structure Research, we are headquartered here in Toronto. My name's Phil Shih. I'm the managing director and founder of the company. And as you know, we take a global perspective in our approach to the sector. And so we're more than happy to get on at any time of day to talk about internet infrastructure. So what we've had lined up today is just a quick update, kind of a mid-year check-in to see where we are in the APAC market. The first 6 months of the year has certainly been full of activity. And what we're going to do here is just provide a quick synopsis, update on some of the main developments we've been seeing, and give you a quick snapshot of our market share data. And at the end, maybe take a few questions if you have them. So again, appreciate you taking the time to join us. Thanks to our sponsor, Digital Realty, who has been behind and supported us on many of our live events over the last years. But of course, lately it's been in more of the online format. I know many of you probably have a bit of webinar fatigue, but you know, I think we're probably getting to the end of that soon. So we'll have to meet like this for now, but hopefully I'll be able to see some of you sooner than later in that part of the world. Agenda for today, we're going to start off with some market share data, talk about a bit of the main developments in the strategic arena, and then just talk about some of the highlights that we've seen in our tracking over the first half of the year. That's me. I think I've already introduced myself. Let's right into the market share data. I think many of you guys have seen some of the commentary coming out of us. This is coming from our recently published global data center co-location report that Jabez Tan, our head of research, led. And as you can see, the APAC market is large. It's the largest market on a regional basis in the world, and we have it at about, these are US dollars, 24 billion in the year that just passed, tracking to 27.5 and growing at a 13.7 year CAGR. This is just a view on a percentage basis, and you'll see over the next 5 years, we expect, if our predictions are accurate, that the market will take up about 50% of APAC will take up about 50% of the APAC region. And so this is kind of a picture of the trajectory, 2020 on the top, 2025. As you can see, a significantly, a climb to about half of the global co-location market, and you'll see roughly 20 odd billion in value in revenue generated from data center service providers in that time frame. This is the same kind of projection, same time frame, same time series, but looking at it on a megawatt basis, so you'll see the numbers are slightly different. We see the market between last year and this year climbing from over 7,000 megawatts in total inventory in the region to about 7,500 at the end of this year. And if you track that out to 2025, we think that we'll hit 10,000, and it'll be growing at a steady CAGR of about 9%. On a percentage basis, the percentages move a little less. That's a view right there. And again, just the time series analysis from 2020, what it looks like to 2025. The percentage is relatively steady, but you'll see the big difference between 6,837 and over 10,000. Speaks to the kind of growth that we see, that we've seen happening in this region over the last few years, and that we see continuing, if not accelerating over the next 4 to 5 years. I want to switch quick here. So that's the data center co-location, encompassing interconnection as well, wholesale retail flavors of data center co-location. I want to just quickly pivot to a snapshot of our managed infrastructure market share projections. As you'll see here, we've highlighted the Asia region. The total market's worth about 53 billion in 2019, according to our recent projections, and we feel that's going to grow to about 93 billion by 2024. Just a quick definition: managed infrastructure is pretty much any outsourced infrastructure service run by a third-party service provider that does not fall in the co-location or hyperscale cloud bucket. So that's anything from private clouds, managed hosting services, bare metal hosting services, SMB hosting services, and importantly, as part of the hyperscale ecosystem, managed third-party cloud service or managed public cloud services are also in this bucket. We break all that detail out in some of our research, and if you're ever interested in taking a look at that, please do reach out to us at any time. And so this is just the same managed infrastructure category. We've highlighted in the reddish orange the percentage of the total global market, and you'll see following a similar trajectory to data center co-location, trending upwards, perhaps not as fast. And I think the big reason for that is the growth of hyperscale, which is a story that we'll get into very quickly. So this is just a quick level set for where the sector is today, 2020, 2021, and how we think it'll change in the period up to 2025. As you can see, if you think about the market and include the on-premise piece, which is growing much more slower, if not negatively, and if you look at the trend towards outsourced infrastructure, whether that's co-location, whether using a public cloud or any of these managed infrastructure services, you see a world that is changing. One that is predominantly kind of traditional and legacy, where we are now, predominant as in over 50%. And you'll see if current trends continue and if the projections that we have are accurate, you'll see a world that is dominated very quickly by outsourced infrastructure services, with the on-premise continuing to shrink and just to be a smaller piece of this pie. What is driving all this? I think the answer is pretty clear, and if you followed our research, I think you know what the punchline is. Where hyperscale is clearly the big driver behind all this. As you can see, it's a smaller piece, 17.2% on the left, and on the right, you'll see it inches quite quickly to 50%. And given just what we've experienced over the last 16, 18 months with this global pandemic, I think some of these trends, I would argue, and I think many of you would agree, are starting to even pick up the pace and accelerate. And there's historical precedent for that. And we'll talk about that maybe a little later on. So hyperscale, just to highlight what we've tracking out in Asia. Jabez is working. I know some of you speak with him on a regular basis. We're pleased to report that you'll notice I didn't present any hyperscale breakout. That was deliberate. We are right now set to publish completely refreshed hyperscale tracking. And so we'll probably have to reconvene here about 3-4 weeks from now. We'll present that for you, our new hyperscale cloud market share numbers. But where are we seeing the builds? This is just a quick snapshot of what Azure is doing. As you see, busy in multiple locations in East Asia, Southeast Asia, ANZ, in China as well. Google in two locations, as you see there. AWS, very deliberate and somewhat conservative in terms of locations that they select, but doing some very concerted building in some very important markets in Mumbai, Jakarta, and Melbourne. Oracle Cloud, not to be ignored, increasingly coming onto the radar on the hyperscale side of things, building out some infrastructure in Singapore. I know many of you come from the data center co-location side of the business, very keen to understand hyperscale demand, how it's profiling, how it's trending. Is it good? Is it bad? What is the total addressable market? Try to answer all those questions in this slide here. This is where we see current leasing trends. I would say AWS is probably perhaps leasing trends when it comes to using co-location for their hyperscale cloud builds. As you know, self-building is something that does happen, probably not the majority deployment model or model of choice, but definitely something that AWS in many regions around the world and in Asia is looking at and trending towards. And so we have as you see here, the contrast with them trending a little bit downwards, in contrast to Google and Microsoft, which we feel are using as much, if not more, co-location and doing much less self-building, or being much more selective when it comes to self-building. Now, we feel, our take on Google and Microsoft in particular is that they're not only aggressive in terms of building out more locations on a global basis and more locations in a region like APAC, but their demand is not, these clouds are, public clouds are perhaps not as, they're obviously not bigger than Microsoft in terms of footprint and revenue. But if you think about their demand, you also have to consider a lot of the other things that they do that require public cloud, that require data center infrastructure. So things like LinkedIn, not just Azure, things like LinkedIn require infrastructure, the Microsoft 365 services that are very popular, G Suite, the competitor to that, obviously consumes a lot of infrastructure, as well as gaming platforms like a Stadia, I hope I pronounced that right, Xbox, which you guys are pretty, many of you have played. And that's contributing to the demand, and why we feel that in terms of the total leasing co-location behavioral trend is upwards. And another thing that's driving it that perhaps an AWS doesn't have is just Microsoft and Google have legacy platforms that don't sit on their public clouds, and so and sit in proprietary data centers that are typically not in co-location, third-party co-location environments. That's starting to move. Google recently, I think some of you may have seen, making it clear that they're going to even YouTube doesn't necessarily run it. This service started, I remember back in the day on a single server in a data center in Texas, and obviously that infrastructure got shut down. But there were a lot of other proprietary and internal data centers that have run YouTube to this point, and Google has made it clear that they're going to start moving that to Google Cloud. So they're providing, by extension, a significant demand increase, and just in terms of, if you just imagine how much infrastructure it's going to require to host YouTube. And so, if you're able and serving and pursuing a Google Cloud, there's that additional demand, not just on top of their other service, but the legacy profile. Same thing at Microsoft. In fact, very arguably, maybe they don't have something as big as YouTube, but they have a whole bunch of other kind of legacy stuff all over the place that also, as it turns out, surprisingly, some of it is not on Azure, not running on Azure. Azure was kind of built out separately within the organizations, and legacy services, or services that, kind of grouped into non-cloud and other categories, like an Outlook.com, or what was Hotmail back in the day, the search service like Microsoft Bing that we don't really talk about much anymore. But those services are also, Microsoft is making it clear that they need over time to get things onto Azure. You combine that with all the other things that they're, all the other kind of markets and segments that they play in, you're looking at significantly volume of increased demand, and that can translate in the scenarios where they're not self-building, working on their own, can translate into third-party co-location demand and consumption. So I guess any presentation these days probably touches on this a bit. I don't want to belabor it. I think we're probably really tired about talking about this to this point. We'd like to, perhaps get vaccinated, and hopefully getting to the tail end of this pandemic. But I think there's obviously been good and bad in terms of certain verticals, and certain industries have been more heavily impacted. And if they're using co-location, managed hosting services, private cloud services, their service providers by extension may be impacted. But at the same time, there's also been definitely some benefit coming out of this environment. Work, I think everybody is well aware, work from home, probably 90% of you on this call are working from home, if not all of you. Just the consumption of online content, the rapid escalation of e-commerce uptake, mobile app usage, all this has contributed to a period that has seen this category, and we borrowed this from our friends at Newmark Knight Frank, talking about this was published last year, talking about year-to-date REIT returns, and I think it's very clear which categories have been hurt, and which have been steady, if not thriving in this environment. So yes, a lot of headwinds, yes, a lot of tailwinds, but if you put that all together, a lot of this stability in this sector has been reinforced, and a lot of the demand that has come, that is unique to this environment, has come in and really boosted the sector. The question, of course, coming out of it is, will it continue, or will it even accelerate? I think many of us have some strong opinions or on that. I certainly would be one on the more optimistic side and bullish side. So with that happening, kind of that as a backdrop, with all the growth in the sector pre-pandemic, through the pandemic, and potentially accelerating out of the pandemic, established data center operators, infrastructure providers have been pursuing this opportunity that's not, that's popping up across the region. They're definitely unique. The diversity of the region is so compelling, but there are also some, and this translates to significant market opportunities. And you see established operators going after it. Some of them a little more early stage markets. So you see STT with the recent joint venture. You see the Indonesia flag there. India is going to be a long-term, extremely important strategic market. Just in the last few months, Iron Mountain, EdgeConneX, working at home in the pandemic, but establishing JVs to enter those markets. Equinix and Colt have made their moves. You see Digital Realty. We watched their virtual launch of the data center in Seoul, entering that market. PDG, Princeton Digital Group, also recently acquiring land in India, and they haven't, unfortunately, I didn't quite get this before their announcement, but you'll be hearing them entering a new market very soon. So I've got that as TBD, but something to look forward to in the next week or two. So definitely global platforms. So those are companies that I just showed. Obviously have an extensive experience operating in the APAC region. Some of the global platforms out there, like NTT Digital, Equinix, continue to double down, triple down in existing markets with their existing footprints in the markets that they are already operating in, setting up JVs, definitely planning for long-term growth and expansion, as well as entering new markets. The opportunity is extensive enough, and the nuances of each sub-region or individual country markets is so unique, and the growth potential across the board is so attractive that it's attract new platforms, companies that come from different backgrounds, come from different regions, are going after new opportunities and establishing, acquiring assets and getting, acquiring assets, acquiring land, starting greenfields, and entering these markets. This is just a snapshot of, try to be as recent as possible. K2, you'll see some Indonesian flags, which I'll talk a bit more about. But some new operators like Leading Edge in Australia, Yota in India. I hope I pronounced this right. Turbidite was a new entrant. You've seen Digital Edge last year, close consecutive transactions to enter new national markets. And you've seen, as I mentioned, some of these platforms are backed by existing or experienced management teams that have previously successfully operated and exited data center platforms. But you're also seeing entrants come from outside, sometimes a little bit outside the space, and establishing joint ventures with operating teams. I'll point you to the two Pure Data Centers and ESR on the bottom that recently established JVs with logistics firms that have significant real estate holdings in strategic markets. So Pure Data Centers looks to be doing something in Indonesia as well. ESR acquiring, I believe, land plots and shells in Hong Kong and Japan, and all of this again in a very busy first, even just the last 2 or 3 months. So a very busy year, as you have well seen. So all of this, I think, is I think, just as a high level comment, I think the our coverage, many of you who speak to Jabez on a regular basis know that he has spent the bulk of the last few years in the core, we like to call it the JASH, or the core four markets in APAC: Hong Kong, Singapore, Japan, and Australia. Japan and Australia, of course, encompassing two metros. We feel the next two kind of non-China category APAC markets that will see a significant rise are Mumbai in India, Jakarta in Indonesia, and I think we'll talk a bit more of this. But we think the next wave, could come. We're quite optimistic. Just the scale and scope of the Southeast Asia region. We think that there are going to be hyperscale markets emerging potentially in Malaysia and Thailand, and Taiwan. We find to be an interesting one. We'll talk a little bit about that in a second. So some of you have seen this, comes from one of our recent reports. Probably could use, we tweak this on a regular basis. But just to give you a sense of, where we see the more established markets, where we're seeing the developing markets and the ones that have significant opportunity upside, and those that perhaps are smaller and moving along at a more incremental pace. I mentioned Indonesia. I wanted to touch a bit on this market because it has certainly taken up quite a bit of our time recently. It's a market we've eyed very closely for a long time, and feel that there is significant potential, just given its position, location, the size of the market. But it's always been extremely underserved and somewhat less mature. But over the last 2 years, I think there has been some significant momentum building, and we've just FYI, I think we've published a detailed report on this market. So our first addition to Jabez's JASH Core 4, and just a market that we feel, I think last year we've had it at about 72 megawatt market, and something that'll double and triple in the next 5 years. And so this is just a summary of some of the activity we've seen that from a hyperscale cloud and data center perspective is significant. I guess I'll just kind of point to some of them. Go start with the top left. DCI, a very established operator that went public, continues to build out. They recently, again in this year, launched JK5. Tencent Cloud is the latest hyperscale platform to land. They announced the first availability zone and anticipate a second one in 2021. As far as we can see, no self-building, use of co-location. Alibaba Cloud, same thing, no self-building, use of co-location. The first hyperscale cloud to enter this market, and recently brought online a third availability zone. So you're seeing the hyperscale momentum that's going to drive this growth. At this point, it's only Alibaba Cloud, Google, and Tencent just, maybe in the last 60 days. But I think that's what's interesting about this market, is that the large AWS and Microsoft are coming. It's going to take them a few years to build everything out. And the China-based clouds are coming. So this is a unique market in Asia, in that it is likely to serve all the major public cloud platforms, whether they're based in the US or whether they're based in coming out of China. And that's a very unique combination, especially in a region that has a ton of different kind of geopolitical dynamics and fault lines. And so I mentioned the pure data centers entry, and of course Digital Edge recently acquiring Indonet, which came with an edge data center, which is also a part of this very large pipeline that we've got tracked, and that we feel will drive this doubling and tripling of the market. ST with a JV with Triputra, and just if you follow this startup scene, which I think is really interesting, that there are quite a few unicorns in this market, which are the source of a lot of public cloud growth. And there was actually a merger, and so Gojek and Tokopedia will no longer go by those names. And they'll have a newly merged name that I'm not going to try to pronounce in case I get it wrong. The other interesting thing that we've heard rumblings about over the last while, but have started to see some developments, was we haven't even really seen Jakarta become that hyperscale and established scaled hyperscale market, and we're already talking about the next tier. the next market. Of course, that's not entirely what this is about. I think this is also Batam Island, as you can see, very close to places like an important key critical market like Singapore, which has, obviously faces certain, as you can see even from this picture, land constraints. You need land to build data centers, and Indonesia is just such a large country, where there are markets that are going to need infrastructure that are quite far from Jakarta and the islands that they're situated on. So this is going to be something to watch. We've seen we've been hearing about activity behind the scenes. There's a land purchase recently that was disclosed publicly, and so yeah, this could be something. We've seen how public clouds like AWS have tried to serve multiple markets by going kind of in between major metros, and so who knows, maybe we'll see something like that here. Of course, this will take some time to develop, but it is interesting, and I think speaks to the just the dynamics of the region. You have such a strategic and large hyperscale market in Singapore on such a small land mass, and they're not going to make any more land, unfortunately. So they're at some point in the future going to be looking at more interesting and creative solutions, and this could be one of them. Of course, there's the moratorium as well. So a lot of things to think about, not just here, but I'll get into also on the geopolitical perspective, also shaping where and how clouds are being built and data centers to house them. Just wanted to, I think we've, on a standalone basis, APAC, speaks for itself. The size of the market, the growth, the demand that's coming from it is driving. We see indicators not just within the region, but you can see them from outside the region. Public companies listed on U.S. markets across data center, managed hosting, managed cloud, even SMB hosting services. They consistently report international growth, and a lot of that international growth coming from APAC as being the healthiest and driving a lot of the growth, as these markets still have so much upside and are still earlier in their ramp up, in their trajectory. So I think it's interesting that this is kind of insights that are included in many earnings reports, and as I said, span not just the enterprise market but the mid market down to the SMB. We're also seeing, and I think another interesting thing is, that's growth, coming from different regions supporting, a large provider's total revenue and their growth. You're also seeing deals or customers being kind of exported internally between regions. So it's recently I think Digital Realty pointed to increasing exporting of deals from APAC to Europe. And so I think that perhaps has not happened as much in the past, but is starting to pick up. And there are, platforms out there that are, like I don't have the Colt logo up here, but they exclusively serve those regions. Global Switch would be another good example. And so you're likely to see a bit more of that as well going forward. I alluded to geopolitics being another driver. I think, TikTok was going to be owned by Oracle. Maybe you're going to use some Oracle Cloud. That doesn't seem to, that didn't happen. There's the Chinese app ban in India. But if you think about that impacts, for those of you in our world, in the data center hyperscale world, that has a big impact. So you're probably not as going to expect to see as much growth for, say, Chinese-based clouds in India potentially. And so there's also, and I mentioned, I pointed to the Batam Singapore example. Around geopolitics, we're also seeing a shift in the status in Hong Kong. Jabez makes the great joke that you're not just going to, just pick up and unplug all the subsea cables and the connectivity ecosystems and knock over the data centers in Hong Kong. But I think we're already starting to see some shifts in, and at least at the very minimum, end users asking questions, doing their due diligence, making backup plans. Again, looking at a market like Singapore, and potentially why we feel that Taiwan is both interesting and has quite a bit of potential in that it could perhaps serve as an alternative, given everything that's going on from a geopolitical perspective. So I think what we're going to see, nothing dramatic, as nothing's going to be, unplugged and turned off overnight. What we're going to see is, I think, if you're in the business, what to plan for and to expect and project is that you're going to see a certain level of decentralization, a lot more hedging of bets, existing infrastructure, and the public clouds that are already operate in Hong Kong. They're still going to operate there. They're still going to expand and grow. But the kind of the next phase and the expansion phases, there's going to be a lot more variables to consider when serving kind of the greater, kind of that East Asia, Greater China part of the market. Some interesting developments around Alibaba lately that I thought I'd just quickly point out, particularly around their recent earnings report, which is a bit slower, and there's been reporting that they've lost a major customer, and potentially could. There is some word that something like a ByteDance could be even attempting to enter the cloud infrastructure market. So that I think is something definitely important to keep track of, and could shape the market in the next few years. And I think another something that strategic landscape we've seen is the potential for more telco divestitures. We've already seen some in the region. Off the top of my head, I think in Indonesia, in Australia, but I think you're going to see more strategic reviews. I think this process has played out quite consistently in North America, in Canada, in Europe, the United Kingdom, and I think that in the next few years you probably will see a bit more of this, and so that'll contribute, I think, to some M&A activity or strategic activity in the market. And opportunistic platforms may be able to latch onto something here to be able to enter or accelerate their entry into markets. So I want to just conclude. I think at the end of the day, data sovereignty is increasingly important. Performance, the sophistication and the complexity of applications, the demands of end users are driving in-country infrastructure. And I think what you'll see, just like you saw in Europe, when Amazon first entered, it served the entire continent out of Dublin. But now the clouds are, have multiple European markets. Azure, Microsoft is trying to enter pretty much every meaningfully sized European market and building out in-country infrastructure. And I think you should expect the same in APAC, and that will, I think, define this significant growth that we're expecting. I think, I've mentioned Jabez a few times, even though he's not here, but he heads our practice in APAC. We are based in North America. We do spend a lot of time in the region. Very focused APAC practice. Unfortunately, that has not happened for a little while, but we anticipate it will. But at the heart of it, we are very global in our perspective and continue to track the market from that perspective. So stop there. That's my contact information. Anytime you want to reach out, we'd be happy to discuss there's more under the covers in terms of our research and our tracking of the market. If you have needs, we're always happy to hear about them and hopefully serve them.